I just went short on Starbucks. Starbucks, of course, you know the company. If you don't know it, very simple. Starbucks is a well-known company that specializes in coffee and tasty treats. It operates thousands of coffee shops around the world where people can enjoy a variety of hot and cold beverages and blah blah blah. Of course, you know Starbucks. Why I'm shorting Starbucks? Very simple, because if we click here on what's happening, thanks to our artificial intelligence, we can see that the company is experiencing some problems with both customers and workers. Okay, now the AI agent is updating. Here we are. Labor settlements, margin pressures, strike, and labor actions. These are all the problems that the company is experiencing right now. And I'm more aligned with the bears sentiment at the moment, more than the bulls sentiment. Okay. And so I went a little bit deeper on the results, and let's try to apply the same method we saw before. So, revenues. Look, revenues, yeah, are better. The TTM is better than the previous period. Okay. So, this is something good. But let's look deeper. Oh, I don't know why. I think I found the bug because I don't have the grow rate. But, by the way, as you can see here, the 5-year is slowing down. Okay. Oh, the revenues are probably slowing down, and this is a bad sign. If we go to the net income, here we can find a different situation. And as you can see, both on 5 and 10 years, we can find a worst situation. This growing number on the 5 years is because of the COVID. Okay. So you don't have to trust this number, because if you go back in time, you can see this is based on COVID results. Okay. So, and of course, as you can imagine, it's something bad for the chart. But anyway, if we go deeper in these results and we go, for example, here in the visual part, and we switch to quarterly, if we see the ratios, look at the profit margin. The profit margin of this company is collapsing. Okay. And this is something that happened many times with company that had many problems. And of course, they tumbled on the stock market. Because if we go, for example, on Intel, here we are, and we go to the fundamentals, as you can see, if we go on the ratios, we can find exactly the same situation. Okay. This is something that happens before the numbers, revenue and income, start to be really bad. Okay. So I deep dive again. And if we move here to the calculation of the fair value, and we switch off the enterprise value on sales, because as I told you many times, this is a method you can use with companies that are losing money, and also the discounted cash flow, because it's very different. It's too different compared to the Peter Lynch and the economic value added. Here we can find a company which today is fairly priced. It's just almost 1% above the fair value, but I mean, it's fairly priced. But because of these shrinking results, of this shrinking margin, I really think, and of course, this um, revenue grow downtrend on the 5 year, I really think we could be in a very bad, at the beginning of a very bad period for this company. And last but not least, I really don't like the new CEO because he moved from his house to his office 2 or 3 days a week with a private jet, and I don't like that. Okay, so I want to short the company, and that's it. This is my last trade for today. Anil, shit coffee, Starbucks. The best is Lavazza. Of course, Lavazza is Italian.